First thing we need to talk about today are some massive price drops being or forecasted by Goldman Sachs. Goldman Sachs has identified 4 cities that are on the cusp of double-digit price drops. A couple of things I want you to know about this report is A, Goldman Sachs is making this call about the end of 2024. Yes, folks, this is a Q4 2024 call. Goldman Sachs knows that housing doesn't fall that fast, even in markets that are overvalued and run up by iBuyers and the like. So let's get into the list. First, the top of the list actually surprised me, I will admit. The top of the list is Austin, Texas, with a forecasted price drop of 19%. Phoenix, I'd have guessed that one. Phoenix at 16%. San Francisco at 15%, and finally Seattle at 12%. Again, folks, double-digit price drops forecast by Goldman Sachs. But let's be clear, this is the end of 2024, or about 22 months from now. But again, that's what Goldman is saying. A couple other things we need to talk about today. I don't know if you heard this, but Meta has significantly cut the price of their high-end virtual reality headset. This is once again something that is being bullish by Meta. I am certainly glad I picked up some shares sub $100. It had a good run on Friday. Costco missed top line, but the earnings hit expectation. Costco is saying that the consumer is buying less stuff. Marvel Technologies missed top and bottom and talked about inventory corrections. Bumble issuing a secondary offering to raise cash. Something we are going to see this year is if companies can, and they are one of these quote unquote zombie companies, and again, a zombie company simply being somebody who has to live on debt as they build out the application or whatnot, they will issue shares, often called a secondary offering, and Bumble is one of the first to do that. We need to talk about what to watch out for next week. We'll do earnings first and then the economic calendar next. The economic calendar has a huge date on Friday, but more on that later. On Monday, we have Lordstown Motors, another EV company. Tuesday, we get Stitch Fix and Dick's Sporting Goods. Stitch Fix is going to be interesting. They have had some rough quarters, and they've been kind of at the tip of the spear. So is a bottom in sight? Is more pain ahead? I think Stitch Fix might give us some indication. Dick's Sporting Goods, what are the retailers doing? Is it like Macy's and maybe a surprise report, or like others and it is a negative? Campbell's Soup on Wednesday, talk about a company that is all commodities. What is going on with Campbell's Soup? Are their input costs still rising? Do they have purchasing power? Are they going to be raising prices? What is going on? And then finally, Thursday, Ulta Beauty, Gap, and DocuSign. I'm probably most interested in Gap. It's kind of that middle of the road clothing retailer. What is going on? Are they having a discount? Do they have the right inventory? I think their CEO just quit or resigned like 6 months ago because of some decisions. So we will see. And then DocuSign, another pandemic darling. Are they finding ways to increase revenue and the like? All right, let's get into the economic events. First and foremost, today on Saturday, Mary Daly is speaking. Mary Daly, if you don't know, is a Fed president of San Francisco. Could be market moving. We will see what she has to say. Monday, we get factory orders. Tuesday, Powell testifies in front of Congress. That is always interesting. Powell will be back at it on Wednesday, so it's a 2-day affair. Also on Tuesday, we have consumer credit. Is consumer credit still growing? What is going on? Besides Wednesday's Powell report in front of the Senate, we will also get the ADP report and the JOLTS report, right? The JOLTS report is important. Do we still have 1.9 openings for every unemployed, or is that coming in? And of course, the ADP report, it has been doing a better job of giving us an indication on what the employment report will be on Friday, but it is not an apples to apples comparison, so don't get confused. But the ADP report will be our first look into February jobs, so it will be very likely market moving. The JOLTS report also will likely be market moving. Thursday, again, every Thursday, this is something you and I can watch every week. We will get the weekly unemployment claims. Last week, again, it came in low at 190,000, down from 192. What is going on there? We also get another Fed president speaking. Fed President Waller will be speaking. And then Friday, the big number of the week. This is your opportunity to take a guess. And if you get it right, I will send you a Nailed It t-shirt. On Friday, we get an employment report. The expectation is 225 jobs added, 225,000, sorry, let me get that right. 225,000 jobs added in the month of February. So, folks, do me a favor. Take a guess. Leave a number below. And then on Friday, we will all go in and see who got it right. And if you got it right, I will happily mail you a Nailed It t-shirt. I'm going to wildly guess right now. I don't know. This number just popped in my head, so why not go with it? 307. Everybody can guess. My number is 307. Leave yours below. If you want to just be simple, will it be over under 225? Obviously, I'm going to take the over on that. Other things that are interesting. Amazon is pausing construction on their second headquarters in Virginia. The company is clearly trying to curtail expenses. What does that tell you? Seriously, Amazon stopping or curtailing the construction of their second headquarters in Virginia. To me, this tells me there's a company that is really managing expenses and cash flow. They are making some other decisions as well. So again, I think this is just another sign that growth at all cost is kind of behind us. Fortune magazine has written some articles that are basically what you and I have been talking about for about 6 or 9 months. Quotes in this article: I can't afford to sell because I don't want to lose my 3% rate. When that happens, the market loses the move-up buyer. It loses supply and demand. Inventory for first-time home buyers is not coming. Goldman Sachs in this Fortune article is highlighted as saying 99% of borrowers have a 30-year mortgage below 6%. 28% of those are below 3%. Just for example, if you want to do some math, this is according to Goldman. I did not double check it. A $600,000 mortgage at 7% is $3,992. Let's call it $4,000 between friends. A $600,000 mortgage at 3% is $2,530. Let's call that $2,500. Now, I realize on one I went up and one I went down. So what? That is a $1,500 difference. If you want to say $1,400, I get it. Either way, the same house. Wow, let's actually do some math. So if your basis is $2,500 and the delta is 14, what is that? That's about a 62% increase just because the cost of capital. That is why the housing market is broken. The housing market isn't broken today because of interest rates. The housing market is broken because we had 2 years of people purchasing and refining sub 4%. Sometimes people don't understand when I say the housing market is broken. They think I'm talking today. We're seeing the impact of the broken housing market today, but it was broken 3 years ago. The Fed stayed too low for too long. Another quote from the Fortune article. I want to downsize. How many baby boomers want to downsize? But losing my rate means my payment almost doubles for a smaller home. Who's going to make that trade? I mean, honestly, would you make that trade? I'll say it again. Your payment doubles, you get a smaller home. That is a broken housing market. The housing market is broken. So an interesting comparison between New York and Florida. This is according to the Bureau of Labor Statistics. Florida, in their last report, has more job openings, more jobs, let me be clear, more jobs, than New York for the first time ever. Yes, folks, Florida is a booming economy. It is no longer the place where people go to retire and relax. Just so you have the numbers, this again is according to the Bureau of Labor Statistics. Florida has 9,500,000 578,500. New York, close but below, 9,576,100. Very interesting. And the last thing, folks, as always, every weekend listening to the All In podcast, there is a couple of things that jumped out to me. One is Chamath Palihapitiya was offered 6.5%, I think it was 90-day T-bills, 3-month T-bills by Credit Suisse at 6.5% interest. At what point do you not buy assets? You just stick it in treasuries, right? Even if it's just 90 days at 6.5%. Now, I don't think you and I can get that because I think this was a special from Credit Suisse to the billionaires, but it is interesting to watch. At some point, you and I will just collect interest, maybe like 1981 when people were getting interest at 14, 15%. And then finally, something that Chamath highlighted, I believe they gave credit to Bloomberg for this. I have not gone to Bloomberg and verified this. I just watched it on the All In podcast. Chamath highlighted that while the earnings have come out and generally speaking met or been above, they have been what I call dirty. Folks, as I've shared many times on this channel, I was one of those general ledger accountants. And you can have reserves and accruals and make business assumptions that impact the income statement, that impacts earnings. They don't impact cash flow. So what they were highlighting in this Bloomberg report is that earnings and actually cash flow ending up in the account are not the same thing. There has been a divergence. And when that happens, I call it dirty earnings. Now, as an accountant, something I want you to realize is this is a game that is legal. It is generally accepted accounting practices, but it is often short-term. You can make some short-term accounting decisions, make a quarter or two look okay, and then you got to pay up. It is not something that lasts forever. It is not a game that you can do forever. So at the end of the day, folks, that is what I got for this Saturday Daily Financial News. I hope you enjoy this. Again, folks, like, subscribe, comment, and don't forget to leave a comment below. What is your guess for the jobs created in February? And just so you know, you can put a negative number. It is possible that jobs went negative. It is obviously not my call. I think I guessed 307. Maybe it was 309. I think it was 307. Anyways, folks, take care. Have fun. Bye-bye.